Hey folks, Dan Frio here with your Mortgage Minute. Did you guys see the congressional meeting yesterday with Federal Chairman Powell? Elizabeth Warren sat up there. She was the first one to ask questions, and here was a couple of the questions that she asked. Well, does raising rates help drive down the price of food? He's like, no. She's like, well, raising rates drive down the price of oil? He said, no. And then I'm sitting there saying, that's not what the Federal Reserve does. Elizabeth Warren, that's what you guys do. Okay, so Federal Chairman Powell, he's just trying to kind of fix this problem that they created and you guys created. Okay, so that's my rant of the day. So let's get over to the news today because the Federal Reserve's in the news. Federal Chairman Powell is speaking in front of Congress, and we got everything just going out of whack. So let's break all this down so you guys understand it, because the goal of my channel is to make sure you're informed and educated on real estate, especially the financing piece of the puzzle. So here's mortgage rates, but we're going to get to those in a second. But you see they're starting to come down. But let's get over to the headlines. The Federal Reserve. What is the Federal Reserve? Why were they even created? Well, basically two things. They have two mandates. Trying to keep inflation in check. You can see right here, they're dual mandates. Core inflation and the unemployment rate. It doesn't say in here food prices or oil prices or how much I pay at the parking garage. No, this is their mandate, so they try to control this. Okay, so that's some idiocy there. Then the next thing is, we have a Harvard person, Harvard's Herman, who said, did you guys know interest rates and high prices are squeezing out large number of home buyers? Whew, I can see why that guy went to Harvard. He's a genius. Okay, but then you start seeing all this stuff. But adjustable rate mortgages are all over the headline today, and a bunch of other things. But more talk about adjustable rate mortgage, and I'm going to come out with a new special report on that here soon. So let's get to the economic calendar to figure out what's going on behind all this. Well, Federal Chairman Powell is going to speak again today. I'll watch all the stupid questions that he gets asked that has nothing to do with what he does. And it's just grandstanding by politicians, which really drives me crazy. Then we start seeing the initial jobless claims. Look, previous readings was 231, 229. So that's starting to come in check. That's all basically the news we have today. So let's go over to the economic indicators. There's a reason for this. When we went back and I just reviewed what the Federal Reserve mandates are, one was inflation. And the biggest piece of that inflation is energy. Okay, energy inflation right through here. So you can see all these are adjusted by percentage. So look at all the percentages. Do you see anything in the 30% range right through here? So we break this down percentage. That's 3, that's 5, that's 6. Nothing really here says over, in percentage wise, maybe 5 or 6%. Then we get to energy inflation, up 35%. So that might be an area that we focus in on, or maybe our government focuses in on. But the good thing is, did you know that the crude oil is right now in a bear market? We're actually down 10% in the last 5 days. We're down 13% in the last 2 weeks. So we won't see that feel at the pump yet, because what do I always say? When gas prices go up, it's instantaneously. But as these oil prices and everything start coming down, the gas companies will gradually move that down. So why haven't they moved down 10 or 13% in the last 2 weeks? I don't know. Congress, that's your job, okay, to figure all this out. Elizabeth Warren, maybe you start worrying about those things instead about how much the Federal Reserve is going to do about food prices, which they have nothing to do with. So that being said, that's my rant of the day. Let's get over where mortgage rates are. So the first thing we want to look at is the mortgage-backed securities market. Why? This is basically my crystal ball to see what the heck's going on. What this is this a bond that trades on Wall Street? Let's refresh it. We're up 22. Let's see where that goes. Up 22, staying stable. Love it. So as you guys that follow me always, you know when this number goes up, mortgage rates go down. This is the price of a mortgage bond that trades on Wall Street. As the price goes up, as you can see here, the rate or the yield goes down. Well, look at the nice trend that we have. Let's go to, I don't know if this will give me a 2-day trend, but I can go probably to a 1-month trend. But you can see the last couple trading days, we're seeing some good news right through here. So how does this reflect over to mortgage rates? Well, Well, we had some great news yesterday. Mortgage rates are starting to come back down. Okay, so this is mortgage rates published by Mortgage News Daily on a daily basis. This gives us the averages of what's going on out in the world in regards to mortgage rates throughout the US. What I want you to pay attention to mainly is the adjustments right through here, because this rate, there's probably a 1 in 100 chance that rate's going to be your rate. Okay, so why do I show you this report if that's the case? Well, I want you to see the changes that we're seeing each day. So if you got approved, for example, let's go down through a VA loan. Let's go down through here. If you got pre-approved for a VA loan and your lender did not lock you, you could see that your rate might have dropped almost 1/4% today. Okay, in one day. You go across the board, we're seeing reductions. I called yesterday, I said we'd probably see about a 0.1 to 0.125 reduction, and we got, I was pretty close on all those areas. The trend for today is positive, and there's really, other than the federal chairman Powell speaking today, there's really not much news on that front. So that's my report for today. I have a website. I don't know if you guys know about it, but if you want to find out more about your credit and credit scores, I created this a couple years ago. Actually forgot about it, but if you want to go here, it's available for you. The only tabs I would suggest you use is 2 of them really. One is a free credit score. You can click that, get your free reports and all that other stuff. It's a Vantage score, but it's very educational. If you really want your true credit, what we see as lenders, what your car dealership sees, what your insurance company sees, you can click here and there's a discounted price for you to order your actual true FICO credit score. So that is it for today. If you'd like to learn more about me and my team, go to therateupdate.com and here it is. There's many ways to get a hold of us. It is on the top right up here right at the corner. You can call, schedule a meeting. You can even chat with us, and I think Nico's up on board right now. You can even chat with us with this chat bot. And if I'm on there, please just click and say, "Hey Dan, how's it going? Just thought I'd check out your website." So thanks a lot, guys. We are now federally chartered, so if you're out there anywhere in the country, we would love to help you. If you have a loan estimate and you've locked in your rate, please send me your loan estimate. What happens is, once you lock in rate, or once your lender pulls your credit, they have 3 days to send you what's called a loan estimate. That loan estimate is going to break down your loan amount, the terms, all the numbers. It's going to give us your rate and how much the fees are for you to get that rate. Email me your loan estimate. Let me review it for free and let you know if there's anything better out there, because we have over 100 lenders in our portfolio and I can help clients all over the country. So email that to me at dan@therateupdate.com. But that's my report for today. Don't forget to join us tonight at 7 p.m. Central Standard Time on our live event. We're going to answer any and all the questions you have. And then I have a special guest from Florida telling us about the Florida market. So hopefully you join us then. So otherwise, God bless. Thanks for watching. I'll see you later tonight. Bye-bye.